So in that respect, it's a positive sign that there is some resistance, because that's an indication we're making progress here.
Warmly welcome everyone to a new episode of Move the Money Interview series. This time we're joined by a legend in the industry that have been working, moving the money and sustainable investment since the 90s. With me I have Reto Ringer, CEO and founder of Globalance Bank in Switzerland. Welcome to the show. Reto, if you want to, instead of me giving you your background, maybe you can tell the viewers who you are and what Globalance Bank are up to.
Sure. I'm an entrepreneur in the intersection of financial markets and sustainability. And I graduated here in Switzerland, the University of Zurich, on economics. I was always working on banks before university and after. Always in the investment field, and that really fascinated me. Stock markets, prices, and so on. But on the other side, I was not inspired by the business itself. And in parallel, I always had an interest in environmental topics. And so I really was surprised to see that financial markets did not care about the environment, about sustainability, about climate change, because at that time in the 90s, it already was clear that we have an issue here. And so I started my first company focusing on sustainable asset management. That name was not taken there because nobody had an interest in the field. So I called my first company Sustainable Asset Management and started as an entrepreneur at the age of 28. I did not know what that meant, being an entrepreneur, because it was not told at university. And that's how it started. And I realized, that's exactly what I want to do, being an entrepreneur and, develop new services, products, inspire people, and build up new markets.
And today you run the Globalance Bank. Was that the company you founded in the 90s, or is it later that came into place?
No, that was way later. I, learned a lot since then. I started the company Sustainable Asset Management in '95. And we were focused on investing in sustainable companies on behalf of private investors and institutional investors like pension funds. We were way too early in the 90s, way too early. I mean, it was so naive of us to think that there's a market, but somehow we survived, we developed. And the first challenge we had is that people felt this is about costs and not about return. Maybe we will come to that later on. So we thought, okay, we need to have a good story to explain people that this is about return. And what do you do then? People look at the Dow Jones index in the news every evening. Is it going up or down? So we had the idea to create a Dow Jones Sustainability Index, right? So we approached the company Dow Jones, tried to convince them, and finally they were, willing to do that with us in the 90s. And that really was a big success for us because, imagine Dow Jones, they owned the Wall Street Journal, a pure capitalistic manifest, and they do a sustainability index in the 90s. That was quite an achievement. So we did that, we started that, and with that we gathered a lot of data because we had to do an analysis of listed companies about the sustainability of, McDonald's, General Motors, ABB, and so on. And that gave us a lot of data, insights, and also gave us credibility. And then 15 years later, we sold the company, Sam, and then had the idea to start, a bank because a bank did not exist on that topic. And so we found that's a big market opportunity, and that's how we started Globalance Bank.
So it started with asset management and ended up with building a new bank that you run today.
Exactly.
It's kind of, I think most of our viewers, they understand the difference between investing in green companies or companies that are making the green transition happening, etc. But as a bank, what difference you? Is it the companies you lend the money to, or is it everything that is kind of worked into sustainability? What is making your bank special compared to others? And what is your prime client? Where do you find the clients that appreciate what you do?
Yeah. So if you start a new bank, we started in 2010. The world is overbanked, so the world does not need another bank. So you really, really have to be very different from what is on the market. And the benefit we had is the white sheet of paper. Because if you would start a bank today, probably you would do that way different than the people that started the bank 10, 50, 100. Here in Switzerland, we have banks that are 200 years old. You would do it differently. And that was our opportunity. So I would say we are very, very different first from our why, from our DNA. We're a B Corp, and even in our bylaws, we say we want to have a positive impact on not only for the shareholders, but also for the society, for the environment, and for the economy. So that really drives our company. It's not only about return, it's also having a positive impact on the financial markets. We feel that capital has a responsibility. You need to be responsible if you have capital. If you're a wealthy person, then you have a responsibility. And we want to help the wealthy people to take that responsibility. And so we're only producing electric cars. We're not producing old cars with combustion engine and so on. So we only focus on new cars. We have another software. We have another DNA. We have other tools. We can be much more innovative because we're a smaller company, and today technology offers you great opportunity for very low costs. But the most important thing is we want to be the bank that inspires the customers, because you're not inspired by your bank.
No.
You're really not inspired. Customers of banks are not inspired by the bank. And that's our objective. We want to inspire people with their investments. They should be proud of their investments. They should feel the impact investments have. And that's something you have to develop. You have to develop tools. You have to develop transparency. You have to develop communication. And, that's exactly what we're doing.
And what kind of client are you targeting? Is it other entrepreneurs, or is it wealthy individuals, or a combination, big companies? What is your key target group among your customers?
No, we are geared to private investors. So our previous company was focused on institutional investors, and we are focused on private investors, families, foundations, and so on. And that's a very, very different target group. So institutional investors, they don't take the responsibility by themselves. It's always delegated to a group of managers. Whereas if you're a wealthy individual, you are responsible. You cannot delegate, right? It's your money and you have to take the decision. And that's a very different, mindset. And our customer are between 40 and 60. So that's about one generation below what traditional private banks have. They have between 70 and 80.
Yeah.
We will not get them. They will not change the bank. They will not come to us, but their daughters and their sons that inherit the money, they have another value set, right? That does not often match with the bank of the parents. And that's exactly our target group. So 50% of our client base is female. That's a lot for a private bank, right?
Yeah.
So it's young entrepreneurs, tech entrepreneurs that have an affinity to the environment and so on. It's a generation of heirs. In Europe, 3% the wealth of the total wealth will be inherited year by year by year by year. That's a huge market. And those people that inherit the wealth of their parents, they have another value set, and that's exactly where we're tapping into. So that's our market.
And what can you offer those clients of yours that the kind of more traditional boring bank are not doing?
So the product that banks are offering is performance, investment performance. That is commodity. That is not a big thing. Most of the banks deliver exactly the same performance. There are very, very few outstanding players. They are not in Europe. Those are the Warren Buffetts of the world, but there are very, very few of them. We are average here, right? In Europe, performance is average. So that cannot be a differentiating factor. So what we deliver on top of performance is really purpose. We want to be investors proud of their investments. So what we deliver is transparency. Where I am invested, what's the temperature of my portfolio? So we have developed a digital tool like a Google Earth, where you can see, what is the temperature of my portfolio? Is it aligned with Paris, below 2 degrees? Is it higher? And those are the tools that really have an impact on investors. If they see what's going on with their money, they want to be part of it. They want to change it. They want advice. And that's really the added value that we have. We give people a feeling what's going on with their investment, every day. I'm a customer of Spotify, and by year end, I get this video, 60 seconds with what music did I listen to in spring, summer, which are my favorite songwriters, and so on. We do the same. We make an annual customized report. What has your investments done last year? What was their impact, positive, negative, and so on? So we give them much more information than just pure performance numbers.
I tried this temperature portfolio tool you have, and it's very pedagogical and easy to understand. But do you have the data around what you kind of the average temperature your clients' portfolio actually are performing?
Whether we have the data?
Yeah.
Yeah, I mean, we get data from third parties, and the data is getting better and better and better every year. I think the climate has the best data. On other environmental topics, it's more challenging. Let's say biodiversity, that's really very difficult, but climate is getting better and better and better. So yes, we have the data, and then we calculate it for the portfolio, for the signal holdings they have, for the benchmarks, and so we can work with that data.
And when they see the data, are they changing their strategy and lowering the temperature? How does it often work? And what do they do? Are they kind of moving investment from fossil fuel into cleaner alternative, or how does it work in practice?
Yeah, I mean, it's not only about energy, it's also about, companies that have a much more efficient, treatment of carbons and so on. That can also be a construction company or a software company or so on. So what we make transparent is of your investment universe, which are good companies vis-a-vis climate, which are, companies that are not so efficient. And then, we have an engagement process with the client to create a portfolio. The challenge here is obviously that you still need to be diversified.
Yeah.
Because if you only end up in let's say investing in solar companies, then you don't have a good diversification. So that's exactly then where we come in to help the clients to build a robust, diversified portfolio in the context of decarbonization.
Yes, and it's also about what we need in society. I mean, one kind of company that have very low direct emission are other banks. But if everyone just invests in banks, there will not be as many real companies producing things.
Yeah.
So that leads our conversation about the market, right? And when we booked this interview, I think it was almost 2 months ago. You're a very busy person, and I'm also quite busy. So I'm glad we made it here. But it was a different financial market, and everything looked very different 2 months ago. Things were starting to move in the right direction, and I feel many in the finance industry and also in a lot of businesses saw that the market were going to, we were ending the inflation, and the market was suddenly starting to move in the right direction in many ways.
Yeah.
But that's not the case anymore. Now it's kind of very chaotic, and we have the tariff war and everything. How is this affecting your niche? Are your clients questioning their strategy more? Because what we have seen, you can correct me if I'm wrong here, but at least what I see talking with many others is that just green companies, they are taking more hit compared to fossil fuel companies and unclean companies. Are people backing off, or are they just seeing that they need to just dig in and go through this, or are they even seeing a buying opportunity to buy on low price, and when the market are getting back on track, they will sell on a higher price? How is this affecting your business and your clients' business investment?
So I would say there are two dimensions on your question. So one thing is the overall market conditions independent of sustainability. And here it's really, we are in the room of confusion.
Yeah.
Everybody is confused. Nobody has an idea where this is going. It's very foggy and it's very dangerous out there. It's a new situation. We cannot take the recipes of the past, but we have to find new concepts. So that's an opportunity for us because we work with transparency. We give investors an insight. Where are you invested and so on. So, from the overall perspective, that's an opportunity for us. When it comes to, let's say, green companies, then I think it's the opportunity of a lifetime. Because what is happening right now is we have a carbonization in the United States, drill baby drill,
Yeah.
right?
Yeah.
And we have a massive decarbonization in China. China will be the new Saudi Arabia of clean tech.
Yeah.
I mean, if you look at the market share of batteries, electric cars, solar, it's 80-90% is coming from China. So the United States and China have a very, very different strategy when it comes to clean tech. And I'm not sure whether this will play out well for the United States, because if they are protecting their markets with tariffs and the others are building cheap technology, efficient technology, I mean, I don't know who will win and who will lose. So in that respect, there is no economic scenario in the future where climate will play a less important role. In every economic scenario in the future, climate will become bigger. So this is a trend that will not disappear. And we will have to deal with it. And that's an opportunity. And yes, it's also about timing and about, company selection. It's not just you invest blindly in company, but this is such a strong, theme, which will not go away. And you can look at China, they have a plan. And independent of the volatility of the weather, they are executing the plan. And so you should do also as an investor. I mean, take Warren Buffett. I mean, he stays invested for decades in the companies he owns. He doesn't change it every 2-3 months. He really has a plan and executes on it. And I think it's the same with this topic of clean tech.
And do you see that your clients are moving the money from US to China, or even from Europe to China? Do you see that kind of, are they taking a bet on this, or how?
That will take some time. I mean, what we see is that they are taking it out of the United States because they're
Yeah,
afraid. They do not know what's going on there. You know, it's volatile, it's risky, so it comes back to Europe. But is Europe the right place? I mean, do we have innovative companies? Do we have growth here? That's also a question mark. So that's this room of confusion. I mean,
yeah,
where should I invest? I see a lot of people, you know, going to the Middle East, where it's really also, you know, they're growing. They have clear plans how to expand infrastructure and so on. So yes, you see a shift also from not only geopolitics but also investments are shifting, and that's you know that's happening slowly, but and that could be a big threat also to the United States.
yeah. And talking about the capital flow, do you see that the capital are moving into green solutions or out from it, or is it kind of the same as it were 1 year before? Where do you see the capital flow goes? Because we have also seen a lot of green tech companies fail. I mean, quite recently you had this Northvolt in Sweden that
Yeah,
went bankrupt, and those big projects didn't succeed in getting their long time funding in place, and that creates ripple effects that weaken the confidence from investors, etc.
yeah.
How do you see this affect the whole sector of green and clean tech?
Yeah. So when you look at the financial market and the sustainable funds as an example, right? We had a boom of those funds in the last 5 years. They were really growing much about the average, and in the last 2 years, you know, they were shrinking more in the United States than in Europe, but also here.
Yeah,
And the reason is not because the demand changed. The reason is because the supply did relabel those funds. You know, 5 years ago, if you were a bank and you needed to do a sustainable product, you relabeled your existing funds, and then maybe you took out one or two companies and said, now it's sustainable. And suddenly, you know, the volume of the funds, of the sustainable funds, was going up just because of this relabeling.
yeah,
And now it's vice versa. Now they are more cautious because of greenwashing and regulation and everything. So I mean, they're relabeling again, but the demand is still there. So in the United States, it's different. There are many institutional investors have been forced really to go out, also from a legal perspective. In Europe, it's slightly different. When you look at the companies and whether they invest in let's say decarbonization, take a company like ABB. Uh, they have become a little bit more cautious when it comes to communication, right? Because it's dangerous if you
yeah,
say, you know, we're investing in green tech, uh, but they're still executing their strategy because this is a long-term plan they have. And just because another US president is now in charge, they will not change the strategy, right? So what you still can see from industrial companies, they're still, you know, pursuing their strategy when it comes to developing products for decarbonization and that type of development.
yes. But if we also see the kind of condition for the market, we see many industries that needs to change that are not really doing the change because there is no incentive for them to
Yeah,
invest in the new solution. I agree with you when it comes to the sectors that are already moving, like solar, like renewables, like transport. That's, I mean, that will, the market are moving that in the right direction.
yeah,
If you're not electrifying, you will be taking out of business, no matter if what Donald Trump will be able to do, etc. But if you take the more like late stage sectors in the green transition, like the fashion industry, for example, you don't really see change. And what I pick up now is that they are, starting to go back to business as usual because they can't make the other way of doing things profitable. We have seen several companies in this sector went into bankrupt because they were taking a bet that the regulation will make it mandatory to recycle clothing materials and things like that. And when politicians are moving back from regulation, that hurt the investments, that hurts the companies that were in the front line of investing in change. How do you agree with me that this is a problem, and how do you see that this can be navigated around?
Yeah, I mean, when you talk about the regulation, that's a relevant market factor, but I think the consumer is much more a driver for the companies, right? Because regulation can bring you to a certain point, and then you fulfill the regulation, but then you need to compete on the market with others. And whereas in the situation, let's take with electric cars, they become much cheaper, they become much more efficient. So now they're really, competitive with combustion engine cars, and that's why more and more consumers are, deciding to buy an electric car. In the fashion, the consumer, it seems that he's not willing to pay an extra price for it, and that's why I think it's really the consumer is an important driver. Same is construction industry. If I build a house, maybe it's not that relevant for me today what kind of construction material I use, but maybe it's more relevant what kind of energy supply I have in my house, and there it's more competitive, the clean technology. So it's really different from industry to industry.
Yeah.
And I mean, what my experience learned me, I started 95. That is 30 years ago, 30. That's a generation.
Yeah.
And we're still at the very beginning in the financial markets. Financial markets are a laggard in the whole topic, right? Like the fashion industry, we're not really leaders.
No.
This takes time. This takes a lot of time because, the closer you get to the tipping point, the more resistance you have.
Yes, exactly.
Right? And you have to overcome that resistance. And there are many people that will lose a lot. They have assets that they have to write off. I mean, take Volkswagen in Germany.
Yeah.
I mean, they have so many assets that are stranded, potentially stranded. That's a challenge for them, and they will resist, of course.
This is very interesting because this is exactly what we see. The people in the climate movement, they're starting to feel very depressed because they see that things are now moving in the wrong direction. And it's easy to feel that that's happening because people are giving up, this is not working, etc. But I say the same thing, and I see the same thing that you see. The reason why we now see this big resistance, not just in US but also elsewhere, is because the green transition has become too powerful. So it's become a threat. And that's actually what we have been up to since we chatted last time, is that we have launched kind of a campaign for this. That we
what does
call,
it say?
Make Science Great Again.
Yeah.
And it's the fact that if you see the resistance, I mean, most people won't change. There's a lot of studies around that. The market are moving in the right direction. Some sectors are going faster, some slower, but the pace is there.
Yeah.
We are going off fossil fuel. It's just a matter of the time frame.
Yeah.
And those that are threatened by that, there is some special interests that are very threatened by that, because that will hurt their investments and they will hurt their power. And they have been working exactly like the tobacco industry, try to stop change. And
exactly.
For many, many years, they did the classic thing, deny the problem. We don't believe in climate change, it's not changing, blah, blah, blah. That is not working anymore because you can just go outside and you will feel the heat.
Yeah. Yeah.
So what they have been doing, like a couple of years ago, they started to change this tactic and started to delay change, saying that, yeah, we need to change, but let's do it later. Let's do it tomorrow. We don't need to change now.
Yeah.
And that's not really working either nowadays in many sectors, because the economy are, it's like people are not going to buy old cars when you can buy new, much better cars, etc.
Yeah.
And most of the new energy that are built are not coal, it's fossil free. I mean, it's like it's going really, really, really fast.
Yeah.
So what we see and what we try to highlight with this campaign is that this is kind of the final resistance. And what they are now trying to do is to target and cancel science itself. It's coming from US, but it's also happening in European countries and all over. That is kind of a counter movement. I can give some example. If you see, just for climate change, there's an observatory in US, in Hawaii, the Mauna Loa Observatory, where we are measuring the carbon dioxide every day. And this is a data series since the 60s. That is something that the new US government are targeting and trying to end the land lease so that that data will not be available anymore. That's just one example. You also have political movements in Europe that if they get the power, they are going to shut down all wind powers. That's not so science-based either. So this campaign is all about highlighting this and get people to be aware of it, and also help the science community to defend themselves by communicating. What will our society be if we are not using it? There's a real risk we're moving backwards into some kind of dark ages. So what do you think of this narrative? And can that be an enabler to unlock more people, more money doing the right thing? What do you think?
Yeah, I mean, the higher you get to this tipping point, the higher the resistance get. That's what you are describing,
Yes.
right?
Yes.
So in that respect, it's a positive sign that there is some resistance, because that's an indication we're making progress here.
Yeah.
But we have the technology, right? So the technology is there in a lot of areas, but we don't have the institutional framework, regulation, tax system, benchmarks, blah blah blah, and we don't have the mindset yet of the people that are in charge, right? So I think it takes maybe a next generation of people. I mean, my daughter, she has a completely different mindset. She's 19, than my generation has. And, they're not on power yet, but, they're becoming more vocal, and they're also, they buy a lot of fashion. They start looking at those things also. So my hope is really that, this is also a generational issue, right? And so hopefully that will really help then to enforce the transition as a consumer, but also as decision makers. But that will take some years.
Yes, the problem is that we are not having endless of time.
That we don't have time. That's your topic, right? I know.
So
Yeah.
so that's the challenge here. I mean, the change will happen because the new generation will come in to take over the power, because that's what people are growing old. Leaders are being changed to new leaders. But what we are, and what I'm very afraid of personally, is that will be too late to just wait for. So that's why we need bankers and other change makers, exactly like you, that try to change the system that is not working, but by doing things differently. And that's why we at We Don't Have Time try to share those initiatives, like your bank, to more, so that people can, use your solution, and that will compete with the old ones, and that they will sooner than later realize that if they don't change themselves,
Yeah.
they will be replaced, not only by the younger generation, but with
By the
competitors that are
market.
doing things better.
Yeah.
So
No, I fully agree. And that's why we work so strong with inspiration,
yes,
right? Because inspiration is a strong force. And if I'm inspired by something, I would like to be part of it. So
yeah,
that's our strategy, to inspire people to be part of the change. But the other day, I had an 80-year-old wealthy guy here with his daughter. She is 50, and she is inheriting now part of the money of the family, and she would like to change the bank to us, right? There is no way that I can convince her father that this is a good thing to do here, because he has another story in his mind, right? He has another background.
yeah.
But she's so strong on that, right? So I mean, I will work more with people that are willing to change, because to convince a laggard,
No, it's hard.
that's
Yeah,
I
I
rather spend time on the people that are a bit in the
yeah,
middle and not decided yet, and there are many of them.
yeah, I agree. I mean, it's like this curve. We have the
Yeah,
people that are going in the forefront.
early
They are already
movers.
doing it, but if we can get just the kind of early adopters and the majority moving
Exactly.
in the right direction, we will move the mountain. And the
Yeah,
reason why we feel this resistance and that the kind of old system are fighting back is because this mountain are starting to tip
yeah.
on our side. So thanks for doing what you do, and let's keep pushing. One final question to you.
Hmm.
How are you optimistic? I mean, if you see kind of the climate crisis and we are heating the planet every day. We have been above 1.5 degree, not just only last year, but every single month this year.
Hmm.
Are you seeing that we're going to solve this? Or are you optimistic, or how do you feel about this yourself if you think a little bit deeper about this?
Yeah, I think we're going to solve this. The question is how fast we're going to solve
Yeah,
this, but I think we're lucky that technology will help us, because what's going on right now with technology is really supporting a lot of areas. The solutions are growing much faster than the problems, and that's a new dimension, right? Because of
yeah,
a lot of efficient technologies that will help us. And I'm hopeful also for the mindset, that people will see that. What I see right now is that people are much more open to listen, right? And listening and asking questions is a first step then to change your mind. So that's currently happening,
yeah.
because in this room of confusion, people are open to listen to other solutions than we had in the past, and that's a good thing.
Yeah, that's you gave me an insight actually. I think that's exactly what's happening here. People right now are confused. They're not yet acting enough, but they're starting to listen.
Yeah.
And that's very interesting because just a couple of years ago, many people were just doing their thing and not really listening and opening up their mind. And I'm
Yeah.
not talking about all adopters now. I'm talking about
Yeah. Yeah.
those that are not yet fully aware but are thinking. And if we
Yeah.
can get them to listen and have dialogues like this, we can move the mountain. So thank you so much.
Thank you.
And your bank, is it possible to? Is it just in Switzerland, or how can people be your client? How can they find you?
So far, it's Switzerland and Germany, but we also have customers from the Nordic. Uh, but we are based here, so we don't have an office in Stockholm or in Oslo or so. But yeah, we also have customers from Nordic countries.
So, and you have the internet, so we will have your address
Yeah.
to your bank
Yeah.
at the bottom of this broadcast. And if you have a boring bank that is not inspiring you and not doing the
Come to
awesome
us.
thing that you do, you know where to move the money. Thank you so much for joining
Yeah.
us.
Thank you.